Let's look at 5 lessons from the best traders of all times and how you can use them in your trading every single day. Welcome, and obviously one of the most popular and probably also the most interesting books in the trading world is the Market Wizards book series. Absolutely fascinating. I would recommend it to anyone. Great insights, many different books, lots of interviews from different traders, hedge fund managers, and just all around fascinating people. And I picked 5 quotes from the Market Wizards book series, and I'm gonna show you what they actually mean for real-time trading and how you can use them in your own trading. So, the first quote that I picked is, "Being wrong is acceptable, but staying wrong is totally unacceptable." And this is one of the most important truths. And when you read the Market Wizards book series, this is a common theme that most of those most successful traders always talk about. Just take the loss, move on, don't hang on to a losing trade. And it's very important to realize that in trading, nothing works 100% of the time. Even the best system will fail. And if you are planning to have a trading career and trade for the next 20 or 30 years, you will take thousands and thousands of trades. So you will have naturally hundreds and hundreds of losses, but you want to make sure that you get to a place where you are indifferent to winning and losing, where you just take a trade, make sure that it is based on your system, make sure that you are adhering to all the rules, that you only take trades that are 100% within the framework of your system. And if it doesn't work out, you get out. You have a stop loss in place, and when the stop loss is hit, you are out of the trade. No questions asked, no widening the stop loss. I know it's very tempting because we always think, oh, it has to turn around, it can't go on forever. And it's enough to have just one trade go completely against you and you lose your whole account. So one of the most important truths. Second, if you don't stay with your winners, you are not going to be able to pay for the losses. And even if you have, let's assume, a win rate of, let's say something crazy like 80 or 90%, if you are not able to ride your winning trades and if you let the losses get out of hand at the same time, even a system with 80, 90, 95% of a win rate will end up losing money if you cannot ride winners. And obviously, staying with winning trades is not easy. It's a confidence issue, or a lack of confidence rather, if you're not able to hold on to your winning trades. And you have to really put in the time, you have to build experience. Also, the more work you put in, the better your trading plans are, the better your trading business plan. If you use checklists, if you backtest, if you journal, if you really understand what you're doing, if you really put in the time, you will feel naturally more confident. And at the same time, it does take time. There's no shortcut. So really understand that it is something that needs to be worked on. Most traders spend all of their time looking for entries, the best entries, indicators for entries, whatnot. But once they're in the trade, they have absolutely no clue what to do and they immediately chicken out of their winning trades. Whereas at the same time, they hold on to their losses way too long. So it's a very bad combination if you are one of those traders. So make sure to understand that you have to get to a point where you are able to let your winning trades run. Another thing that can help with that is reduce your position size. If you are too scared to let winning trades run, it can often be also the case that you just have positions that are way too big for your account size. Another thing that is very important, the focus and what is your goal, especially in the beginning when you're new to trading. The goal should not be to make a lot of money in a short period of time. The goal in the beginning should be really to build confidence, to learn the system, to understand the market dynamics. So reduce the position size and also shift your focus away from making a lot of money to just learning the ropes and really understanding the system. Number 3, you don't want to have a position before a move has started. You want to wait until the move is already underway before you get into the market. Many traders do it exactly the same. The opposite way is that they try to predict something. As long as the market is going up, they are always selling and selling and selling because they believe that it has to turn around. It can't go on forever. And they also believe that If the market is going up, they're able to pinpoint the absolute top, they will have the best reward to risk ratio and potentially the biggest return. Obviously, this is not going to work. If you have done this a few times, you will know that this is just not going to work. And you have to get away from a predicting mindset to a reacting mindset, whereas you wait for the market to actually show you that a new trend is on its way, and then you get in. Or maybe you are looking at an existing trend and then you wait for pullback opportunities into the existing trend. Those are trades and trading opportunities. There are usually much higher probability and also provide just a higher win rate in general. Number 4, I really love this one. Music is the space between the notes. And in trading, we can say trading is the space between trades. And this is just so important, and it's such a nice quote. And what does it mean? Everybody can take the easy trades, the obvious trades. They come around every now and then, and everybody, when you look at social media, everybody's in the same trades. However, the amateurs, what they're doing between those great trades, they just cannot sit on their hands. They always have to trade and have to trade. They cannot be patient. And what happens is that between those great trades where you can make money easily, in between you lose a lot of money, and you often lose so much money that even the great trades, they won't be able to pay for losses. So the power or the thing about professional trading is that professional traders are the ones who are able to sit on their hands, to wait for the great opportunities, and to not trade all the time. So really amazing quote. I really love this one. And the last one, traders focused almost entirely on where to enter a trade. In reality, the entry size is often more important than the entry price. Many amateur traders will dismiss this because they think this is absolute nonsense. However, I have not come up with this. This is taken from the Market Wizards book, and the size of a trade will obviously have a huge impact on how you interact with the trade. And the size also depends on the stop loss. With the stop loss, you can determine the worst case loss. How much are you willing to lose if you don't have a stop, and if you don't size the trade based on the stop loss size and where you want to get out, your risk management will be completely all over the place. At the same time, if you take a trade that has too much, the position size is too big, it will lead to emotional trading. Even if you are in a great trade, even if the trade would have been gone on to be a hugely winning trade, and within those huge winners, there will often be, when you ride trends, there will always be ups and downs. The market obviously never goes in one straight line to your target. However, if you have a position that is too big, you will often not be able to hold through those ups and downs, and those ups and downs are natural. But if your position size is just too big, you will be often forced out, or you will just chicken out, because every single tick against you looks very dramatic. So make sure that you also look really into position size. Entries are kind of important, but they're just one piece to the puzzle. A trading strategy is much more than entries. And as we have seen, staying in winning trades, being able to ride winning trades, cutting losses, and sizing the position in a correct way will help you make a big difference. So let me know what you think about this. Should we do more videos where we dissect trading quotes and where I explain what they mean in your daily trading? Let me know in the comments below. Also, don't forget to leave a like and subscribe for my new videos.